on the other time frame, on the monthly time frame, the market is trending to the upside, and I've already mapped out my key levels, as you can see. So what I'm saying is that
Mm-hmm.
you can use Fibonacci for to find your key levels, and that's what I'm going to be doing right now. So after drawing your key levels on the weekly time frame, there might still be an there might still be some minor levels on the daily time frame or even the 4 hour time frame. So when you scale down
Yeah.
to the 4 hour or to the daily time frame, you will be able to see all those levels clearly.
Mm-hmm.
So okay, so on this trade, price was moving higher like this, creating this impulsive move, but price cannot continue heading higher without a retracement. Price need to retrace before heading higher. So let me let me delete this first. So when price go to this resistance level right here and price starts heading
Mm-hmm.
lower, so I draw my Fibonacci.
Mm-hmm.
In an uptrend, you will draw it from the swing low, from the low like this, and draw it to the top top of the week. So when, and like I
Mm-hmm.
always said, a Fibonacci will be acting, sometimes it will be acting as a support level in an uptrend and a resistance level in a downtrend. So when I already know that price was coming here into this Fibonacci zone, and there was a key level here as well, so I was able to use this Fibonacci to draw this key level. Maybe sometimes if you wanted to draw your key levels, you might be confused either to draw it from here. As you can see, there was a first touch here, that was a
Mm-hmm.
second touch here, and that was a third touch here. So you might be confused on where to draw your Fibonacci, on where to draw your key levels. But having this Fibonacci area
Mm-hmm.
like this, so it will make it simple and it will clarify it, so that you just draw your zone, your key level inside
Mm-hmm.
this Fibonacci zone. So when price came into it, you'll be looking for buying opportunity. So for
Mm-hmm.
so for now, I'm basically waiting for price to come back down into the Fibonacci zone and use candlestick confirmation for entry. But some trades might not have that, might not go with maybe Fibonacci. You just need to identify it through price action, or maybe just the market structure and trend line. So let me go down to the monthly time frame and start with this. Okay.
Okay.
So the overall direction of the market is to the upside. As you can see, price was moving higher, and I draw this trend line.
Yes.
Yeah, I draw this trend line like this. This is the first touch and this is the second touch,
Mm-hmm.
and the third touch, here's the third touch for the entry. So with this is the area that we'll be looking
Mm-hmm.
for buying opportunities. So let me draw my Fibonacci from swing. Okay, and as you can see, the Fibonacci line up with the level. As price was moving higher, creating this impulsive move, price retraced back down to create a higher low somewhere around here. So I was expecting price to head higher, though there was a price was
Mm-hmm.
unable to head higher. But let me just go with this example first. So when price got here, touch this support level, trend line, and Fibonacci, I was buying because there was enough confirmation to enter this market. There was Fibonacci support level and trend line, and also candlestick confirmation. So but there was an area somewhere around there, so price was unable to break this area. As you can see, there was a touch here, another touch
Yeah.
here, and there's a third touch here. So price was creating a pattern that was called a inverse head and shoulder. So this inverse head and shoulder means sorry, head and shoulder pattern. So this head and shoulder pattern means that it was a reversal pattern. If as you can see, price has already broke out of this trend line. So it
Mm-hmm.
seems that price wanted to head lower. Price wanted to head lower instead of going higher. So what this inverse head and shoulder pattern means is that is for a reversal pattern when price wanted to reverse in the opposite direction. So like how
Mm-hmm.
to identify the inverse head and shoulder is there will be a shoulder at the left hand side. As you can see, this was the first shoulder, and after that price will break higher and create the head. So this was the left shoulder, this was the head, and this was the
mm,
right shoulder, as you can see. So after that,
mm,
you will now
mm,
draw to the neckline of that head and shoulder. This was the head, and also this was there. So you will draw a minor level, though this was a support level, this was a major support level, and it was lining up with this head and shoulder pattern. So if price can break this trend line, as you can see, price has already broke out of this trend line and break out of this zone, this support level as well. So after that, you'll be waiting for price to break it and retest. So then you'll be looking for selling opportunity to sell into this region. So you need, like, if price wanted to reverse in an opposite direction, you'll be looking for either head and shoulder pattern or a double top. So a double in a downtrend, this is just going to be the opposite of this. It's going to be an inverse and a shoulder, but I'll still show you the
mm,
example very soon. But for you to identify a head and shoulder, it's just going to be like this. This is going to be the left shoulder. Price will like move higher, but after that price will come lower, then break it to create the head. So the head will be higher than the left shoulder like this, and so after that price will
mm,
still came back down and come to left this left shoulder region to create the right shoulder. So after that,
mm,
you wait for price to break the neckline. So this is the neckline of the head and shoulder pattern. Then you wait for a retest. After a retest of the neckline, so then you'll be looking for selling opportunity. If the trend was in a down, it was in an uptrend before the head and shoulder pattern form. So this signifies that price might be heading lower. Though price was at a support level, trend line on the Fibonacci, but price, this pattern that's formed on the higher time frame is very strong. So we're just going to be waiting for what price does. But basically, 180 like I'm 80% sure that price will still head lower because of this head and shoulder pattern that was formed and the break of this trend line as well. So you are just going to be waiting for price to break the trend line successfully and this support level, then retest it for a selling opportunity to this region. So let me go down to the weekly time frame and see how price is reacting to the level. Okay, okay, good. So at this region, this is what I call a double top as at
mm,
this region. So price wanted to head lower but still come back up, still expecting this Fibonacci, this trend line, I mean. So when price head back to the upside, price wanted to come back lower, but it was still expecting this support level as well. So when price push higher like this was a double top because as you can see, this top, they are equal. Though this one is little bit higher than this one, but they are equal. So this was a double top. This is how it's going to look. Um, so this is how a double top is going to look. This double top is a reversal pattern as well. So if a double top form like this, then that means the trend is about to change. So this is the neckline. The neckline will be acting as a support level. So for it, we just need the neckline to get broken as well, like the inverse head and shoulder. So you just wait for a break. As you can see, price has already broken out of this trend line. So you just need a break from this neckline of this double top, then wait for a retest to sell. So at this particular pair alone, I already spotted a head and shoulder. This was the left shoulder, this was the right shoulder, and in this right shoulder region, there was still a formation of a double top. So this signified that price is ready to head lower. So you are just going to be waiting for price to break and retest this level, then sell to this region. But maybe on the head and shoulder pattern or the reversal pattern, I will be sending a video on that so that you can watch and understand
okay.
it very well. So let me leave this pair. So what I'm just waiting for on this pair is price to break. I already know what is happening on higher time frame. I already know that price wanted to reverse and it has broken this trend line successfully. So what I'm just waiting for now, even on 4 hour time frame or even 1 hour time frame, I'll just be waiting for this level to break and retest. Then I will sell to this region. So let me show you. Let me give another example. So I already identified the overall direction of this market as well. It was trending to the upside, as you can see. So let me let me draw out my trend line. So sometimes when you draw a trend line, as you can see, this trend line is very far away from where price is. So that's where,
Mm.
if there was a trend line like this, you have to draw a inner trend line that is going to be like this. So the inner trend line is going to be like this. So the inner trend line has already been broken, as you can see. But
Mm.
we can't, on this tree right now, we can't be using trend line because the outer trend line is very far away from where price is, and the inner trend line has been broken. So I will just have to delete the trend line and go with market structure, how price is forming, how price is reacting. So now I already know that
Okay.
the overall direction of the market is to the upside. So then I'll be going down to the weekly time frame to see how price is moving. Okay. So price was creating higher high, higher low, higher high. So and in this, at this region, let me draw the Fibonacci too. Okay. So price was moving higher, and when price go to this resistance area, price start retracing back to the downside. So I draw the Fibonacci from there. So when price got here, as you can see, the Fibonacci level, even without a support level, it was acting as a support. As you can see, when price got there, it starts heading higher. And also, but you can't use a
Mm.
Fibonacci on its own, so you have to use it with a key level. So that's, there was a level inside the zone. So when price got to the level and also the
Mm.
Fibonacci level, price starts heading higher. But when price got here, price failed to head higher. As price come to this zone that created another higher low, price was supposed to start heading higher, but price was unable to go higher, and there, this was a double top as well, as you can see. So this was a double top at this region, and this was the neckline. Let me draw the neckline out. So the double top, the double bottom, the double top in an option is a double top. So the double top pattern is a reversal pattern, like I said the other time. So you are just going to be wait for price to break the neckline and retest it. So the trend line, the number one reason that, like, that gives me confirmation that price wanted to head lower is the break of the trend line, the inner trend line. The trend line got broken, and also price failed to create a higher high. As you can see, price created, instead, price was supposed to create a higher high, but instead price created a lower high. As you can see, this high is lower than this high. So
Yes.
like, so there, so that signified that maybe there was a change in trend. The trend might be changing anytime
Mm.
soon. So
Mm.
that's why I'll be looking for selling opportunity after price break and retest this neckline of this double top. So I'll be looking for selling opportunity to
Mm.
this region. So,
Mm.
so if price touches, for price to, let me draw the Fibonacci, the outer trend line. I mean. Okay, so price can come to the trend line level for the third touch, and like I said, for a trend line to be valid, it needs to have a minimum of two touches, and this is the first touch, the second touch, and the third touch is going to be the one that you will be using for a trade entry. So basically,
Mhm.
price can come to this trend line area, can drop to this trend line area before it starts heading higher. So maybe that's what wants to happen. So I'll just be watching and see. So, but there was can still be a selling opportunity to enter a sell trade on this pair after price break the neckline of this double top, then it retest. So you can sell it to the downside. So basically, maybe price just wanted to retest the trend line before heading higher. So that's how. Okay, so sometimes you might not be getting a trade with Fibonacci or um, a Fibonacci. So you just need to adapt with the market and know how to read the chart even without Fibonacci or okay, good. Let me use this. So first thing first, go on the monthly time frame to identify the overall direction of the market, the overview of the market, and as you can see, it was trending to the downside. Price was coming to the
Mm.
downside. So after I identify that, I'll move to the weekly time frame to draw my key levels and my key. And the reason why I draw this level is because of the touch here. When price got here, it bounced off, and also here too, price got here, move away significantly. So that's the reason why I draw this key level here. And also here too, when price got here, it moved away significantly. And also when you are drawing it, it has to be a level that was obvious. As you can see, this touch of trend line, it was an obvious one, but I don't want to draw it there because this area has a minimum of two touch, but this one is just a one touch somewhere around there. So I just have to leave it out. But it's still a
Mm.
valid it's still a valid level because it was obvious. Price got here and moved away significantly. So this level also is valid, but I just have to leave it out. Because if I wanted to draw it here and also draw this
Mm.
level, the chart will look messy. So and I don't like that. So that's why I just leave it out. So
Mm.
this is the first touch of the trend line, the
Mm.
second touch, and this is the third touch. So there might be a trade entry
Mm.
somewhere around here. Let me use a Fibonacci to see. So I will draw it from the swing low from the swing high, sorry, from the swing high to the swing low. So that's not working here. Let me delete it. So what I'm saying is that for this particular trade, price was moving lower. So this was a lower high, and this was a lower high, but price has not been able to create a lower low. As you can see, this low is still equal to this previous low. This low is
Yeah.
equal. So price has not been able to create a lower low yet. But if I draw my trend line, if I draw my Fibonacci from swing high to swing low like this, so I will be expecting price to move into this zone. And if price can move into this Fibonacci zone, it will be touching this trend line as well as can see inside this zone. It will be touching the trend line, and there was a
Mm.
key level inside the zone as well. So that's basically what I'm waiting for on this trade. So I'm waiting for price to create another lower high. So this was a lower high. This supposed to be a lower low, but price was unable to create a lower low. So the low was equal. But the trend is still valid as long as price has not breaking this lower high. For this trend to be invalid, price will need to break this trend line and break out of this zone as well and break this lower high. So that way this trend will be invalid,
Mm.
but this trend is still valid. So what I'll be waiting for is price to create another lower high. So if price come into this trend line
Mm.
area and this resistance area, I'll be looking for candlestick confirmation to enter a sell trade on this pair.
Mm.
So now I already identify it. I'll just be waiting for price to come into the zone on the daily or on the 4 hour time frame. Let me okay, good. Give you one more example. The Fibonacci too, you are getting how to use it, right? How to
Yes.
draw it from the swing point and
For downtrend, you said from the recent higher low to the
yeah,
from the recent higher low to down. Then for the uptrend from the
from the low
from the low
to
lower low to the
No.
higher
When
high.
yeah, in an uptrend, you draw it from the higher low.
Mhm.
Yes, from the higher low.
From the higher.
Yes, to the higher high
Mm.
that was just created before the retracement starts happening.
Okay.
Yes. Quickly, let me still show you what I meant.
Actually, the one that is still confusing me is that the head and the neck. I've not
That head,
gotten the
that head and
concept
shoulder,
really
right?
well.
That head and shoulder that I just talk about.
The head. And the
Yes, yeah. I will
yeah.
still I will still explain it for more furthermore. So in an uptrend, as you can see, this was an uptrend. You draw your Fibonacci from the
Mm.
lower high. This was a lower high. This was high, higher high, higher low. This was not an higher high, but this was still a higher low at this region. So this was a higher low. So from this low, you will draw it to the higher high that created the retracement. So I can see when,
Mm.
when price got here, that's where it starts retracing back to the downside. So you will draw it from this area, from the bottom, from the recent low. If there it's not necessary for you to know maybe it's an higher high or higher low. You might not be getting that, but just know that from the recent low to the recent high. So you draw it from
Mm.
the recent low in an uptrend to the recent high. So we just wait for price to come back down into it. And there will always be a key level at that region. That's how it is. So Fibonacci
Mm.
will just be acting like a key level as well. So that's how it works. So let me go back down to the analysis. Okay. So on a monthly time frame, the trend is to the downside. So after identifying the overall direction of the market, I will scale down to the lower time frame. And when you are drawing your key levels, you can't be drawing your key levels far away from where price is. As you can see, you can't be drawing your key levels to somewhere around here. As you can see, price is very far away from that level. So that's why I did not draw
Mhm.
any key level. There are many key levels I can draw at this area, but it's very far away from where price is, so it's not going to be useful anytime soon. It might take years before price go to areas like this. So that's why if you are
Mm.
drawing your key level, you just draw it to area where price is not too far away from price. That's what I'm saying. So I already plotted my key levels to the areas that I know that price might wanted to tank into maybe anytime soon. So a touch here and a touch here as well. But I still don't, even this level, I still don't need it, so I might just delete it. I just need all this level that are
Okay.
very close to price. I know that price can touch anytime soon. So let me draw my trend line like this. Okay, let me draw it from here. From the lower high in a downtrend. Okay, good. So this was the first touch and this is the second touch of the trend line. So let me now go down
Mm.
to the okay. So price created a lower high here and created a lower low.
Mm.
See, this low was lower than
Mm.
all this. So this was a lower low and this was a lower high as well because this high is still lower than this high. So this was a lower high and
Mm.
you can't really call this a lower low yet because it's still not lower than this low, but the trend is still valid though. So I'm still waiting for price to create another lower high before looking for a selling opportunity. So this was a lower high, lower low, lower high. This was a low, but not lower though. So I'm just waiting for price to create another lower high before start heading back down. So let me go down to the daily time frame now. So to know that a retracement, because what is happening right now is a retracement. Let me delete this. So to know that a retracement is over, we are just going to be using the Fibonacci tool to identify whether the retracement is over or price still wanted to continue heading higher. Mhm. Okay. So on the daily time frame, I will draw my Fibonacci from this higher low, from this higher low to this area where the retracement starts happening. As I can see,
Mhm.
well, oh shit, sorry. Okay, so when price got here, it starts retracing back to the upside. So that's where I will draw the Fibonacci from. So now, and there was a key level there as well. There was a touch here and a bounce off here, also a touch here. So there was still a key level at this region. So that's the area where I'll be looking for selling opportunity because I know that the
Okay.
retracement is over. So this area is going to be the next lower high. So I'll just be waiting for price to
Mhm.
come back down, create a lower low by going lower than this previous low. So how if price can still go lower than this previous low, this still a valid lower low. So I'll just be waiting for price to come back down. So on the 4 hour time frame is where I will enter the trade. Okay. So there was a formation, but I can't. Okay, there was a counter trend line at this area that I see that price might be expecting. So before I can enter this trade, I will need the counter trend line to be broken. So that's where it will be safer to get into the trade because as you can see, price was expecting
Mhm.
this smaller trend, and though it was small, but price was still expecting it. So price might still tank into it and spike to the upside. So I will have to wait for the break of the trend line, then enter the trade. And when I see that price broke out at this region, I also see this bearish engulfing candlestick. As you can see, this red candlestick was huge. So that signifies that there are more sellers in the market. So that's why,
Mm.
so there are more selling pressure coming to the market. So after seeing this bearish engulfing candle and also this counter trend line broken, so then I will enter. Mind you, I already see that there was also a Fibonacci at this level and also a resistance level. So there is enough confirmation to enter this trade already. So I will enter, put my stop loss above this level, and my take profit will have to go to this level. Though I was expecting price to come lower, like to head lower. So maybe I will just I can put my take profit here, or I can still
Mhm.
put it here because putting it here, this is
Mhm.
the minimum of 1:2. And if I still put it here, so this is 1:3 risk reward. So if price just got here, you would have already moved your stop loss to break even because you know that this was a support level and price might still start heading higher if price got here. So it might be safer to
Mhm.
put it at this blue zone, at this area. But if you wanted to like to catch more pips, like to make more money, you can still put it here. But you know that you would have already moved your stop loss to break even, so that even if price still starts heading higher, you won't have anything to lose on this trade. So that's it. Though this trade was still
Okay.
the trade has already come into this zone like this and made small profit before heading back, and it was in a small loss as you can see for now. So I will just be waiting for price to stay head lower like this. So this was a perfect example. So you will be entering a downtrend. You will basically be entering on a lower high. If the formation of a
Mm.
lower high, so that's where you'll be entering the trade. And in an uptrend, and in the formation of a higher low, that's where you'll be entering the trade. So let me show you one more
Mhm.
example. Yeah, okay. Let me delete all this first. So the overall direction of this market, I'm on a weekly time frame. So the overall direction is to the upside. Price was pushing to the upside, forming all this huge bullish engulfing candlestick. But price cannot just keep heading higher without a retracement. For every retracement, price will need
Mm.
to create a retracement before heading higher. So that's just how it is. So and I draw my key levels based on this level right here, there was a touch here, there was another touch here, and also this area as well. There was a rejection here, and when price got here as well. So that's how I plotted my key levels. And as you can see, if you are noticing my chart, I don't plot like maybe I always plot like minimum of three or the maximum of four level on my chart, because if you have too many key levels on your chart, it might be confusing sometimes. So you have to keep
Mm-hmm.
it simple. Like as you can see, this level is easy. You already know that if price come here, it's going to this region. So it's going to be very simple. So that is the reason why I don't like drawing too many levels on my chart. So
Mm-hmm.
having just
Okay.
maybe a two level is enough on a trade. When so this was a support level already. I already know that I'll be buying if price come here. But I still need additional confirmation before entering the trade, because I cannot just use the support level alone. So there was a Fibonacci from this spring low to the high, to this high, that caused the retracement. And as you can see, this support level was inside the Fibonacci zone. So that's another confirmation. So the Fibonacci right here is acting as a support level. And also price touch this trend line. As you can see, price touch the trend line and wick back up. So what it means is that at a particular point, price sellers push the price to this region, like they push it to somewhere around there, but buyers was
Mm-hmm.
unable to take control and push price to the upside again. So that's why that was this week was formed. So this signifies that there are more buyers in the market than sellers, because sellers was able to push the market back to this region before buyers take over. So that was another confirmation. And when price got here after this bullish and government candlestick and also this Fibonacci level, so you can place your buy order at this bullish and government candlestick after seeing the formation, and then your stop loss will go below this zone, and your take profit is basically just this next support level and resistance level, I mean. So there was a minor level here, though it is a one touch, but when price got there, price move away from it significantly, so it can still be considered a key level. So what this level means is that when price got there, before price hit your take profit, you'll be looking for how price is forming at that region. So if you are seeing maybe multiple red candles forming at this region, so you might wanted to close the trade. As you can see, it's already near your take profit as well, so it's just small pips away from your take profit. So you might wanted to close your trade at this region if you see like red candles keep forming when price go to this region, so you might close the trade. So and even if you close the trade here, it's still going to be a minimum, or it's still going to be 1:4 risk reward. Like that means times four of whatever you are risking. So this is enough. Like it's still enough. So you can still take your profit here. You can put your take profit here. Like if you can't really see your trade going back into loss, like losing all the profits. So you can just put your take profit at this region or still keep it here. So
Mm-hmm.
that's how it is. So you just be using all these Fibonacci trend line. That's all you are going to be using for your technical analysis. So you just need to master how to use them properly. So if you can master how to use them properly,
Yeah.
it's going to be very simple. So it's going to be very simple. You just need to know, after learning how to use every one of it, you just combine everything together. So you just combine it together and be using it for a technique for a trade analysis and then for your entry. So that's
Mm.
how it is. So you just have to keep mastering it. So maybe in the next video, I'll be looking at, like you'll be sharing your chart, your screen, so that I will see how you are drawing your key levels, and if like you can do, what I mean is that you can draw trend line, support and resistance, and Fibonacci, right? Like you can draw them at a
Yes.
chart. Okay, so maybe that's what
Mm.
we are going to be doing tomorrow. So I'll be, if you are doing it, if you are not doing properly, I'll be correcting you. So that's what we are going to be doing tomorrow to see how you are improving on that.
Okay.
So that's it. So
Okay.
I'll just end the
Mm.
call now and call you on WhatsApp so that we can have talk about the
Okay.
different trader five issue you're having. Yeah. Bye. Good
Actually, I
night.
wanted to ask, do you have a YouTube video for the shoulders and the head?
Okay,
If you can send, I can listen.
oh,
Yeah.
I don't have my own video on that, but I can share a video on it from YouTube. I can find a very detailed video on it on
Okay.
YouTube.
Okay.
And also tomorrow, maybe tomorrow
Okay.
as well, or maybe on Wednesday this week, I will find, like, I will show you, I will go into it, like I will go in depth into it and tell and show you how it
Okay.
works on my own chart. So this was an example of it as
Okay.
well. But I will be showing you about it. So that's it. Bye.